What's going on, YouTube family? Welcome to Automotive Life. My name is Lucky, and today we're going to be talking about how to buy and finance a car under your business's name. Now, I've seen a bunch of these horrific videos from these fake credit gurus telling you how to buy cars, completely wrong. Also, I've seen a lot of these rental car companies or these fake Turo hosts talk about how you buy 33 cars under your personal name and absolutely destroy your personal credit. My goal with this video today is to show you exactly what to do and how to actually do it. What the pros of buying a car under your business's names are, some of the liabilities, as well as finance versus leasing, as well as PG versus non-PG, which is personal guarantor. So before I get into the video, if you do me a huge favor and gently squeeze the like button for YouTube algorithm, it helps me find more amazing people like yourselves that enjoy automotive content. Also, please consider subscribing. We do post 2 times a week, so make sure you click the notification bell, and let's get into the video. So the first thing you need to ask yourself is, why do you need to finance a car under your business's name? This is something a lot of videos don't talk about. You have to sit there and really think, do I need a car in my business's name? Now, if you're trying to get a car in your business's name just because your credit is screwed up, don't even waste your time. It's not worth the headache. Spend the time and effort fixing your personal credit. But if you, let's say, want to buy multiple vehicles for your landscaping company, you own a rental car business that you want to expand, or you need a fleet of vehicles to do whatever deliveries that you do for Amazon or whatever else, and you want to grow your fleet, then I totally understand. That's when you say, okay, I need to go ahead and move on to actually business funding. So one of the reasons why so many people decide to register cars and finance under their business name is because there's a lot of benefits when it comes to this. One of the first ones is tax savings. If you buy cars over 6,000 pounds in most states, you can get 100% of depreciated value back pretty quickly. If not, they have bonus depreciation where you could take it over several years, certain chunks amount. Definitely recommend talking to your CPA and your attorney to find out what works best in your state. But another thing is liability. Just imagine if you started a landscaping company, you're doing great, and all of a sudden one of your guys takes a truck and crashes in the back of a school bus and all the families sue you. Well, if the car is registered in your business name, you can go ahead and basically file bankruptcy and walk away from it. But unfortunately, a lot of these small business owners never do the transition of putting the car 100% in their company's name. They wind up keeping it in their personal name because they got the loan through them, and then their liability hits them. And one of the major ones is not screwing up your personal credit. I've seen a lot of these fake rental car gurus coming out saying, oh, I make millions of dollars on Turo, just buy 33 cars in your personal name and you'll be good to go. And I've met a lot of people like this. These people are part of our Discord. They joined some of our programs and now they're students, and it sucks because I'm trying to help these guys get rid of 33 Nissan Sentras that they purchased that they're absolutely buried in. But now they have no way, they're making money, but they have no way of getting out of it. They can never expand. They have to pay these cars down enough where they can free up their credit. They can't buy a house, they can't do anything, and it ties you up. So without screwing up your credit and getting your DTI way out of whack, business credit is the best thing for you. Now, first up we're going to talk about is getting your corporation. Once you get a corporation, I highly recommend you talk to your CPA and an attorney to find out if you want an LLC, S Corp, C Corp, whatever you think is best for you. Once you get this, you need to file for what's called an EIN number. This is like a social security for your business. Once you get this number, you go and you register with Dun & Bradstreet. Dun & Bradstreet is like the credit bureaus for businesses. Every time you want to do any type of business funding, they're gonna run this. Now, this is very important, and this is what a lot of these guys are not telling you. I've watched some of these fake credit gurus. They're like, oh, all you need is this EIN number and you can go to a bank and you can get approved like that. Bullshit. You need to have a Paydex score of at least 79 to 80 points before most banks will even look at you. Now, you may be wondering, well, Lucky, how do I get this? Because I need to get cars right away. So now this brings us to the great debate of personally guaranteed loan or non-personally guaranteed loan. Whether you're going to want to sign for it yourself or if you want your business to handle all the financing for you. If you want to get to this point, we're going to start off with first doing a non-PG loan. If you have an LLC, you need to have at least, like I said, an 80 Paydex score, and you need to have several trade lines on there. It's fairly simple. It takes a few months to do if you want to go this route and you have the time and you're not ready to blow up right now or buy cars. You can go to several companies out there like Uline, Quill, Home Depot, Walmart, also your local credit union, and apply for lines of credit. If your credit is not that great, what you can do is you can actually give them $1,000, $2,000 to your local bank or credit union and get a CD and borrow against it from your business. You want to have several trade lines reporting very quickly. So within 90 days, you can have an 80 paydex score and you can go out and apply for major business funding. Now, here's the downfall with having a no PG loan. One, you'll get smaller amounts from the get-go. Two, it'll take much, much longer to build these types of lines of credit. So these guys preaching like, oh, you need an 80 paydex score and you can get a Rolls Royce, bullshit. I've seen people been in business for 10 years, have an 80 paydex score, and try to go out and get a Rolls Royce Wraith off of their leasing program that BMW had a few years ago. Doesn't work. If you want to get these big fleet lines like from Ford, Mercedes, BMW, you need to have multiple deep years of actual business credit. We're talking like $200,000-$300,000 loans paid off, or you have to personally guarantee them. And that's what's going to bring us to our next thing, which is personally guaranteed loans. So if tomorrow you open up an LLC, you get your EIN number, and you're ready to, let's say, start your rental car fleet or your landscaping fleet or your construction fleet, whatever you need, you can go to the bank and say, hey, look, I have an 800 credit score, and I'm telling you this right now, if you try to PG something and you're not at least a 690, don't even waste your time. And you need to have deep trade lines. We're talking, $40,000, $50,000, $60,000 credit cards. You need to have multiple auto loans paid, and preferably if you have a house. Some of these things that they see are now going to realize, okay, this person's solid with their credit. We can give them business credit, because usually once they see that, they'll give you even more. So you yourself may only qualify for a $50,000 truck, but you co-signing for your business may qualify for $150,000 of fleet funding. So you can buy maybe 3 trucks for your landscaping company. And this is how it all works. So that's why when I hear these people saying all you need is a fake credit score of 700, it doesn't work that way. Banks are smart. Even though you're like a lot of the automated stuff, like applying for credit card online, like Apple credit cards, that's all automated. There's no human beings looking at that. 90% of the banks are underwritten by human beings, because there's certain disparities that only the human eye can pick up on. So they can read a credit score and be like, oh, this guy's got a 780 with his Macy's card for $200 for 10 years. Oh, he's guaranteed. Business funding, they're going to look and be like, okay, let's see this guy's bank statements. Let's see, oh man, he has no paid loans. His biggest credit card was $5,000. He has no paid auto loans. We can't trust this guy with any sizable amount of credit debt. And so this is how people wind up getting tripped up and not getting approved. So make sure you come correct with your personal credit before you start financing. Now that you have everything set up, you have your LLC, you have your personal credit, and you're ready to rock and roll, you go up to certain banks. I usually recommend going to banks before you go to dealerships, because dealerships will screw you over, which I'll explain here in a minute. But one, if you go like to Bank of America, Ally, Wells Fargo, there are company programs that have fleet services in there. Just like my rental car line, I actually had them through Wells Fargo, where you can go buy cars from them with the purchase of renting them out. Now, depending on what your business is, this is the trick that they don't tell you on these fake credit gurus, is they put a risk assessment on every single vehicle. So let's say you're a transportation company. Your risk is going to be much higher, so they're going to give you a shorter term. And you're maybe asking, well, what's so risky about a transportation company? The miles, depreciation. They know that you're going to be driving these cars miles and miles, and they know that the depreciation is going to drop pretty quickly. So what is the bank going to do to offset that risk? They're going to give you shorter terms. So for a regular person, you may be used to getting 72, 84 months on a loan with single-digit interests. These commercial loans are not like traditional loans. They actually assess like you're using this for business, you're using this to make money, you can pay a bigger payment. So they're going to give you shorter term, and they're going to give you higher interest to offset the risk. This is part of being a business owner. I hate these people. They're like, oh my God, I got a brand new loan for a Mercedes S-Class, but they want me to pay 60 months and I want to do 84 months. Why won't they go 84 months? It's like, because you're a business. They want you to put 10, 20% down, and they want you to pay high payments so you can pay it down quickly, because they know you're going to be putting miles on it. But just like I said, transportation, rental cars, different businesses have different risk emblems. So you may qualify for 72 months. It just depends on what you go for. But you usually get a better deal if you're negotiating with your local bank or credit union. Now, once you get to the dealership end, this is where it trips up a lot of people. And this is also something that people don't talk about. You need to talk to a fleet manager. Do not talk to a salesman. Do not talk to a finance manager. Do not talk to a general manager. You need to talk to a fleet manager first, because they understand that you do not want this on your personal credit. It needs to be registered in the business's name, and you'll have no problems. What happens 99% of the time, these knuckleheads go into these dealerships here's my LLC, my paperwork, I'm ready to go, let me buy this car, I want to put this G-Wagon in my business name. And the bank and the dealership doesn't care. They're like, yeah, we'll sell it to you. And then all of a sudden, they put your name and they put your business name and they put your personal name on the paperwork. You sign it, think everything is fine, and all of a sudden you get the registration paperwork. Guess what? Your name and the company name is on it, and it's showing up on your personal credit. So now you're not doing any benefits for your business because you're not building any business credit. Now you have a bigger debt on your personal credit. And then on the liability side, if one of your employees were to take that car and crash into a school bus, you were screwed because you can get sued personally because your name is on the registration. So don't deal with the regular salespeople up front. Ask for a fleet manager and be very, very descriptive. If they don't have one, don't talk to anybody. Say, I'm not wasting my time, and tell them exactly what I just told you. I don't want anything showing up my personal credit. You guys don't know how to do finance correctly. Fleet lines, when it comes to businesses, is completely separate. Most salesmen and finance managers don't have a clue. Plus, when you're talking to a fleet manager, he'll explain the benefits of getting fleet lines of credit. Now, what are these? These are massive lines of credit that you come pre-approved for from Ford Motor Credit, Toyota Financial, Mercedes Financial, BMW Financial, where you want to purchase multiple vehicles. They'll give you an estimated limit so you can run your credit. I've gotten some of our students $200,000, $300,000, $400,000, $800,000 on some of these lines of credit, and then they can go out and buy whatever cars they want from the dealership. Does it have to be brand new? No, it could be used. It could be new. It could be whatever you want it. But that's one of the great things of actually knowing how to use your business credit to fund automotive deals. And this is something, like I said, that they just really don't talk about. Now let's get into the leasing and financing aspect of it. Now, you're sitting here thinking, okay, I need a new car for my business, but what is the best option? Now, leasing is good for certain things. Like if you want a capture rate, which you know 100% in 2 years, you're gonna get X amount of dollars for your car. You don't have to worry about it, and you can get a new car and just keep it moving. These are great for businesses like, let's say you're a pharmaceutical sales, you're putting on a little miles, but not too many. You keep it clean, you're good to go, or maybe you do office work. I think those type of vehicles or leases are great because you're not losing all that sales tax money. You get a guaranteed return at the end of 2 years, and you can always upgrade your vehicle every 2 to 3 years. The downfall is I see a lot of these clowns with these rental car companies doing leases. You never ever want to do a lease when you're renting a car. 2 reasons. One, it's actually illegal in some contracts for you to lease or rent out your vehicle if you're part of a lease. So don't ever do that. 2, you got to remember every mile and every scratch and every dent you put on a leased vehicle comes back to you at the end. So if you're renting it out to a bunch of random strangers and they're putting curb rash all over the wheels, cigarette stains and burns all over your car, just remember that when you show up to give back that car, they're going to nickel and dime you for every little thing that they see wrong with the car. And I've seen people do that because they do leases because it's cheaper. Well, it's cheaper, so I'm going to go the cheapest route. And that's when they wind up getting burned. Also, if you're a landscaper, you lease a truck, you're going to have to bring it back in showroom condition. If not, your guys are going to be throwing mowers in the back, putting dents, scratches, hooking trailers up to it. It's just going to be destroyed. It's not really worth it. I really recommend financing for most companies because it saves you the headache of actually messing with, I guess, the damage, the headache of having to worry about keeping your cars that much upkeep and cleaning them up. Plus, you can get special insurance where if you do rent them out, you don't have to worry about having the liability of your bank coming back and repoing it from you. Let's talk about fleet lines a little bit more because a lot of people want to buy multiple vehicles that are probably watching this and they're wondering, well, how do fleet lines work? Fleet lines is something completely separate. You actually pay one monthly payment. You don't have multiple payments. So if you go to an auto loan, you buy 6, 7 cars, you have 6, 7 different auto loans. If you get a fleet line of credit from, let's say, Ford Motor Credit, and they give you $500,000 and you use $290,000 of it, your bill is whatever the interest rate is for $290,000, and it comes off equally off each other car. Now, this is a good thing because you save money in interest and headache, and you only got one bill. So one of the downfalls of a fleet lease is you're paying all these cars at one time, one payment, one interest rate. But let's say you have a car that you're just using a lot and you're putting a lot of miles on it and you're beating on it. Well, with a traditional loan, that particular auto loan, you just pay more down on it. So this way you don't have to worry about depreciation and everything else. But with some of these fleet lines, it's one big bill. So you need to make sure that you're constantly paying it down, and then you need to strategize on how you're actually going to pay off your cars, because some fleet lines will request you for weird amounts. Like if you drop 20 grand in the account, it'll evenly disperse it across all the cars to lower the overall balance. You have to physically call in sometimes and say, hey, you know what, on the last VIN number 662, we put a lot of miles on it. I need to actually put $5,000 on this one particular car. And so this is some of the stuff you have to worry about. But the good news is as you have these lines of credit, these fleet lines, it's almost like a line of credit. You can always go back and ask for more. I've seen people get a couple $100,000 up to a couple million from some of these vendors because they just were good stewards of credit. They paid their bills, they paid them off, and then every few weeks, or excuse me, not every few years, they would call back and say, hey, I need 6 more cars, I need 8 more trucks, I need 20 new vehicles from a rental car company, and you can expand quick. Now let's go ahead and regroup real quick. First of all, should you finance a car in your business's name? Yes, because it won't tie up your credit. You can max out your business credit, but keep your personal credit good. So whenever the economy changes, you want to buy a house, you want to buy something else, or any type of financial moves, you'll be available to do it. 2, your personal credit is incredibly important when it comes to business financing. This is what's going to get you over 99% of the humps. So don't listen to these fake credit gurus telling you that your personal credit doesn't matter, business funding is the only way to go. If you don't have good personal credit in the beginning, you're absolutely screwed. So make sure you fix that. Number 3, don't be afraid to build your business credit. I see a lot of people, well, I don't need anything and I got time. Perfect. But everyone always wants to do financing in the last minute because they need something. They got some generalized expansion to go through or they need a car now. Start building your business lines of credit today. Give the bank $1,000, borrow against a CD. Let your business build credit quickly. Credit cards. All those little vendors that I told you about, there's a bunch of companies out there that literally will pay, you could pay them to actually add trade lines and credit lines and help you apply for different business funding. Traditionally, I don't really recommend them, but for you starting out, I would definitely do it. So this way you can help build your business credit even quicker. So this way you don't have to worry about the headaches of, about 6 months or 2 years from now, I'm starting right from scratch. No, you'll have a seasoned trade lines where you can get $100,000, $200,000, $300,000. Now, this doesn't just help you in automotive aspects. This also helps you when it comes to generalized funding. SBA loans, big lines of credit from your actual credit unions or bank. Auto loans is a great way to get started because it's a collateralized loan, it's a much lower interest, and sometimes it's easier to get approved from than an unsecured line of credit. So do the baby steps, do the correct things, build your personal credit and build your business credit, and the opportunities are endless for your business. But anyways, I'd love to hear from you in the comment section below. If you have any questions or comments, please let me know. If you have any tidbits you want to share, once again, put them down in the section below. And don't forget to follow us on Instagram @LuckyLopez, and we'll see you next video.